You were not meant to be a slave to the grind. You were not meant to trade your life force for money. You can escape gravity. You can unlock your life. You got this. Let's go.
Hello and welcome to Unlock Your Life. I'm your host, Jennings Smith. Guys, today we're going to be digging into a subject that is for non-psychopaths only. So if you are a psychopath, this episode is not for you because we're talking about trust. I'm going to be talking about raising capital and the mental hurdles that go into before you even raise your first dollar. A lot of people think, well, I need to have the tips. I need to have the tricks, the tools. What do I say? Where do I find these people? And yet, even when they know all these things, even when they've gotten to the point where they're qualified to talk about this stuff and they know what to say, they still don't do that. So yesterday, I was having a sprint call. So in the deal room, we have these accountability teams of 10 people. There's a sprint leader who leads the discussion, and we lay out, what are you trying to do? What are you trying to accomplish over the next 6 weeks? And what are the specific action items that are going to help you do that? We document them, and then we hold you accountable. We shine the light on you the next week. Did you do it? Did you not do it? You also have one-on-one accountability calls. But every week there's a specific topic. Last week's topic was raising capital. And so instead of diving into the ins and outs and the tips and tricks of how to raise capital and what to say, and granted, all that stuff is important, I asked the group, what's holding you back? What are the things that you're telling yourself? What are the thoughts that are in your mind that are preventing you from picking up the phone, from preventing you from making a post, from preventing you to talking to investors and getting some capital pre-raised, pre-committed? And I wanted them to be honest with me. And they were. And people, they went down the list, but there were some that really stood out. Number one, what if I lose someone else's money? What if I lose money for an investor? It's not like investing my own money in a deal. It went belly up and I lost the money. Oh, well, I'll forgive myself. But now I've lost a friend's money, maybe my uncle's money, maybe some random person that I got connected through some mastermind group or whatever, but I've lost them their money. What if I lose somebody money, right? That's a big concern. Another thought was, well, what if people reject me? What if I'm putting myself out there and the deal isn't that good, the returns aren't that good, and I get rejected, or even if the returns are good, what if I get rejected and talking to the wrong person, the person that maybe doesn't want to invest or would invest, but they're not going to invest with you, and that hurts to put yourself out there and to get rejected. And then another objection that was brought up was, is it worth it? If I raise the money and I give away, 70, 80, 90% of this deal and to the investors, to the money, is it even worth it for me to do a deal and to raise capital? And so these are all valid things. And I think about the first couple times that I was going to raise capital, and I met with an investor and they did reject me. They did tell me no. They said, oh, you don't have enough experience, or I don't think this is a good enough deal, or I just don't have the money right now, which maybe they did, maybe they didn't. I don't know. But I went through a lot of this. I also went through major fear of, what if I lose investors' money? And that's why I said this episode is not for the psychopaths, because if you don't care about losing other people's money, you should not be raising capital. You should not be investing in real estate or doing anything in this field. You definitely shouldn't be in the deal room. But I think most people want to protect that. They want to protect their investors' capital. They don't want to lose any money. But on the flip side of that coin, you've got to recognize this is investing. Some things don't always go perfect. What if that eventuality does occur? And then how can I protect myself against that? How can I protect the downside risk around that? How can I get it to increase my chances of that not happening to me? Or if it does happen, I can make it good. I can make it back. I can pay these people back. I can figure something out. So I want to use a mental model with you. Now, this mental model if you think about the word CTEAR, CTEAR, okay, I've talked about this before in prior podcasts. It might sound familiar to you, but essentially each of those letters is like an acronym and it means something. Okay, so the C means circumstance. What is my current circumstance? Not your interpretation of it, but what is my circumstance? So my circumstance might be, well, I am currently not raising capital, right? That's just a circumstance. There's no emotion attached to it, just the facts. I think about my thoughts, right? So my thoughts around that are, well, it's scary. I'm putting myself out there. What if I lose investor capital? What if I damage my reputation? What if I get into a deal and I don't know what I'm doing and now I've lost people money? What if I do all this work and I do raise the capital and at the end of the day, it really wasn't even worth it. I didn't make that much money on it. Okay, these are all thoughts that you're having. Those thoughts generate emotion. Okay, so CTEAR. So we're on to the E, emotion. Emotion is something that just bubbles up inside of you. You can't help it, right? When you're mad, you're mad. When you're happy, you're happy. Something makes you angry or frustrated or discouraged or you have despair. This is just an emotion that comes from your heart or your mind, wherever it comes from. But it isn't something that you can just flip a switch and change that emotion. And emotions are very, very powerful things because nobody ever takes action without an emotion. You think people buy on logic? They don't. People buy on emotion and then justify it with logic. They're taking an action because they have the emotions driving those things. When things get so painful that they can't handle it anymore, that's when they change. You think about an alcoholic drinking too much. You think they don't know logically that they're drinking too much? You think that they don't know that this isn't good for my liver, this isn't good for my health, my family? Logic has nothing to do with it. And until that emotional distress becomes great, so great that they have to take action about it, they don't change. Right? So these emotions are extremely powerful because they're going to tend to the next 2 points. A, CTAAR. A is action. If my emotions around this problem, right? My thoughts are, oh, this is too hard. Oh, people are going to reject me. What if I lose money? My actions are going to be, well, I'm just going to wait. I'm just going to wait and procrastinate. I'm not going to do anything about it because I really can't process the way this is making me feel. I don't like the way this is making me feel. So why am I going to take action on it? I'm not. I'm just going to take no action. And taking no action is an action in and of itself. You've decided that I'm not going to do anything about this because it's too emotionally tumultuous to do anything about this. And this model will help you solve any problem you're facing where you're getting results that you don't like or you want to get a new result. And the last letter is R, which stands for results. So in this model, circumstances, I'm not raising any capital currently. My thoughts are, what if I lose money? People are going to reject me. I don't want to deal with the hassle of it. I'm not going to make any money with it. The emotions generated by that are negative. Those negative emotions push me into no action. And so my results are, I didn't raise any capital. And maybe a deal comes by that could have used capital. Maybe I find a great off-market deal and I'm not prepared. And so I don't close the deal. And the results are 0 apartments closed, 0 deals gotten into. So what do you do? I've already said you can't take action based on logic. You're not going to get a different result without taking a different action. You can't change your emotions and you can't change your circumstances. That's just strictly the facts of the situation. But we can change the T. The T standing for our thoughts. Because if we change those thoughts, we're going to be able to generate a new emotion. If we can generate a new emotion, then we will take action. Most people try to just focus on the action. And you can strong will yourself into that for a day or a week. But to do that long term, where your actions are fighting in direct conflict with your emotions, it is not going to be sustainable. It's not going to work long term. So the only key is changing your thoughts. Now, can you change your thoughts like this? Because the thought has to be your thought. You have to believe that thought. You have to be all in and convinced on that thought. And so if I told you, well, you're not going to lose any money. You're never going to lose any money. Is that a thought that you're going to believe? I mean, I wouldn't. It's probably not the truth. You might lose money. But can you ladder some of those thoughts over to a healthier place? So what do I mean by that? Well, if I'm going through this problem, if this was something that I was facing, my first thing that I would download is all of the negative thoughts I'm having about this. I would write down all the ways I'm feeling, all the thoughts I'm having, why people are going to reject me, why I could lose money, market conditions changing, anything and everything that I want to download. I'm going to download that onto a yellow legal pad and just write down my thoughts about this. Then I'm going to see all these toxic thoughts. I'm going to see the emotions that they're generating. Now I'm going to take that and try to distill it down into, one or two thoughts, one or two main key kernels that are driving everything. The thought on the thought that's creating that thought. And so let's just focus for this example on what if I do this and I lose people money? Okay, which is probably the biggest fear that most people have or should have if they're not a psychopath. So, okay, let's dig into that. What if I lose people money? Well, how am I going to lose people money? Well, I'm going to put it into a bad deal. I'm going to partner with the wrong people. I'm going to get into a deal and I don't even know what I don't know, and I'm going to make a mistake. I'm not going to know I made the mistake until it's too late. I'm going to be taking the last $100,000 from the poor grandma widow and losing her money, and it's just going to be debilitating on my mental health. Okay? So let's pick apart a couple of those thoughts and see if we can ladder them over. All right, so what about the bad deal? Okay. Well, what makes a bad deal? How could I become great at underwriting? What if I had an experienced partner on the team that really knew what they were doing that could help me avoid some of these pitfalls? What if I ran my deal through multiple counselors and multiple advisors and they were all telling me this was a really, really good deal? Would I have more confidence in the deal? Okay, well, that's believable, right? I'm not saying that you've eliminated all risk, but if you've taken some steps towards mitigating that risk, you're going to have a lot higher percentage of getting a win under your belt versus a failure. So there's a way to mitigate this is just a bad deal, okay? So there are ways to do that where you're studying this stuff and you're getting advice from people who have been there before that have made these mistakes. This is something we do every Tuesday in the deal room. People bring deals to us and they think they're great deals. And guess what? Some of them are. Some of them are absolutely atrocious. Some of them are no good at all. Some of them are very poorly underwritten and they need a lot of help and direction. But guess what? That person's not out there signing on a multi-million-dollar loan and raising millions of dollars in capital half-cocked. They're actually procrastinating to protect themselves because they know I might make a mistake. So how do I mitigate that risk? Well, I'm going to mitigate that through mentorship. I'm going to mitigate that through training. I'm going to mitigate that through multiple opportunities. I'm going to mitigate that by checking the market rents. I'm going to go out to the property. I'm going to walk it. I'm going to meet with the property manager. I'm going to tour all their other properties and see how they're managing their properties. I'm going to look at the financials and T12s on the stuff that they're managing, see if my expense ratio estimates are correct. I'm going to mitigate this risk. I'm going to figure that out. When you start to have these thoughts, you're like, okay, so yeah, we're not talking about just blindly throwing $500,000 at any deal that comes along. We're talking about having a process and carefully and consistently mitigating the risk on that specific deal. So if I have a deal that I feel 100% on, all in, I've gone to multiple other people, other operators. They're all telling me, yes, this looks like a great deal. Looks like it has legs. Looks like you're going to make money with this deal. I've gone to the market. I've vetted the property managers. I've vetted the market rents. I've vetted the expenses. I've done my due diligence. And only at that point will I ever put capital, other people's capital, into a deal. And this can actually protect you because sometimes when it's your own money, you can be a little bit cavalier. You maybe don't do your homework as well as you should, and you make a mistake that you could have avoided had you followed a specific process. But see how these thoughts are already starting to shift my emotion towards hope. Well, hold on. Maybe there's a way that I can feel good about this deal. Maybe there is a way that I can feel confident. Continuing to dig into what if I lose money? Well, what if I lose money? Well, if you're blindly telling an investor, hey, this is a great deal, excellent returns, 100%, never going to fail, and we vetted everything out. You should invest. Don't worry about the details. Just trust me. Is that a good way to raise capital? Absolutely not. What if you were going to people that were, let's say, accredited investors? They'd already invested in multiple real estate deals. They could look over your underwriting. They could look at the market themselves. They could do their own investigation and due diligence on the deal to say, you know what? I like this deal because I like this deal, not just because you said so. I have faith and confidence in you as an operator that you're going to do a good job. But beyond that, I like the fundamentals of the deal. I think your estimation of the cap rate is correct. I think your expense ratio is correct. I think your market rates are correct. I think your exit plan is correct. I like the debt that you've secured. I like the terms. And if you're presenting a deal to an investor as, this is why I like the deal, these are the risks of the deal, there's always risk in investing, I want you to look through this deal and see what you think for yourself, well, that's a much better approach because it is a gamble. You know, when you do these kind of deals, there's going to be deals that go great. There's going to be deals that don't go as well. And there's going to be deals that go poorly. And they are taking the risk. They want the upside. Well, if they want the upside, they've got to be willing to take some of the downside or the break-even side. Right? And so it's not all on you. This is their money. It's in their bank account. They're making the decision to put the money with you or not. And this is where I'm very careful in talking with investors and talking about deals to be as transparent as I can be of this is why I think it's good. This is why I'm signing on the debt. This is why I'm operating the deal is because of X, Y, and Z. But you need to know for sure that you want to do this deal as well. Don't just, oh, well, you know, you said it's good, so I trust you. I appreciate the vote of confidence, but I want the investor to know what they're getting into and assess the risk properly and say, yes, this is something that I want to do. And if you do this stuff right, the risk of them losing their investment can be greatly, greatly mitigated, especially if you take an approach like we do where we're buying stuff 60 to 70% on the dollar, right? We're already insulated by 30% right out of the gate. And then, yes, we still have to execute through our renovations and lease ups. But if we do that, even if the market turns, even if the rates go up, we're going to be okay. And this has happened to me on a couple of my deals where we bought them in 21 and we bought them at 70% on the dollar. We did the renovations. We raised the rents. We did the full pro forma. And yet, because of the market, we're still not massively in profit like we'd hoped to be. But our investors' capital is very, very well protected because we bought that thing at a discount and we did the work and performed, got it filled up, got the rents where they need to be. So when you start thinking this way and realizing it's not all on you, they have some skin in the game as well. They have some onus on them to do their due diligence. This is going to protect you. And the more competent and confident and the more advisors and the more you study this, the better you're going to be. Because this is not something that is a flash in the pan. It's not something you just dip your toe in. If you want to do this stuff, you have to be committed to become an expert in the field so that you can mitigate risk. That's the best way to protect yourself from the downside is to become an expert at multifamily or self-storage or whatever you're trying to work on, plumbing businesses, whatever it is. You need to know that field inside and out so that sellers aren't pulling the wool over your eyes, so that when an operator comes to you with a deal, wants to partner, you can see through the underwriting. You can see, you know what? I'm not comfortable with this deal. You need to be able to do that, and there's no magic button. But when you think, I can still get there, if I put in the work of X, Y, and Z, I can get there. I can get to the point where I am supremely confident to sign on debt, to take down these deals, to operate them, and to take in investor capital. That's when you're going to be generating the emotions necessary to take the action. People will reject me. This was a big one for me. Think about this, though. Think about all the situations that happen in life and where people are at a certain point in time. They may not be willing to invest. They may not be able to invest. They maybe have just invested in something else. I had an investor meeting with a lady. She really wanted to get into some multifamily deals, but she told me her husband wasn't really on board with it. He didn't really like real estate all that much. And she asked me, would you have lunch with me and my husband and see if you can talk him into it? I said, sure, naively. I never should have taken that meeting, but I did. So I took the meeting, and I mean, from the first second I sat down, it was like talking to a brick wall. He had no interest in real estate. Every real estate deal that he had done had gone badly for him. He bought his houses at the height of the market. He'd sold them in the troughs. Then he'd rented and bought high again, sold low. He was absolutely convinced that real estate did not work. So did that have anything to do with me? Did that mean I didn't have a good deal on my hands? Did that mean that I wasn't prepared or I wasn't competent, and that if I had just been a better sales guy, I could have convinced him to invest in the deal? No. His prior experiences, his life, his lens of the world prevented him from investing, not only in my deal, but any deal. You know, there's people that have a liquidity issue. I had an investor who wanted to go into a deal with me, was willing to do a couple shares in a deal, significant amount of money, and liked the deal, committed to the deal. However, found out something was going on in his business. There was some debts owed that he wasn't aware of that his CFO had taken on. They had fired the CFO and needed to get rid of these debts. And so that took the liquid cash over back to his company, needed to make that happen. And so he backed out of the deal. Does that have anything to do with me? No, I just know, okay, next up, I got to find somebody else to replace him. Not that that guy is a bad guy or rejected me, just different situations. And a lot of people, they may be curious. They may want to sit down and talk with you, meet with you. But at the end of the day, they don't have the money to do it. Or they've got their money tied up somewhere else. Or maybe your investment does not fit their objectives. If you're looking to do something that is maybe a good cash flow play, however, the equity multiple isn't that great. Well, somebody that already has a lot of cash flow is looking to grow their net worth. They may not be interested in your deal. Whereas somebody that's looking for more monthly or quarterly cash flow, they may be very interested in that deal. Maybe the returns on your deal are, 8%, 12%, 15%. And you're talking to a guy who has access to deals and opportunities where he can make 20% or 25%. So why would he go into your deal if he already has better opportunities elsewhere? That doesn't mean that your deal is a bad opportunity. It's just not a good enough opportunity for him. I've seen this firsthand as I've gotten more and more opportunities thrown at me through the deal room and through the My First Million Facebook group. I'm pickier. I'm very picky with what I'm going to go in now because I have an onslaught of opportunities coming at me, right? But not everyone's in that situation. So the guy that has his money in his 401k that's making 5 or 6%, he may be very happy with 8, 10, 12, 14% returns. The guy that's already invested in private equity, he's doing real estate himself, he's flipping his own houses, his capital may be better utilized in his own deals. That has nothing to do with you. You just have to find the right person that wants to get in the deal. It's not a personal rejection of you, your skills, your competency, and the quality of your deal. So as you write down these new thoughts, as you isolate the negative thoughts and you say, how could I solve this? What could I do to overcome this? What could I do to mitigate this? What could I do to change this thought so that I can generate a new emotion? Those emotions will lead you to the action of, you know what? I am going to become more proficient. I am going to make the partnerships that I need to make. I am going to dig into this underwriting and analysis and figure out how to do it so I am confident with this stuff. I am going to pick up the phone. I am going to set a meeting. I am going to build an executive summary and go through it with an investor and see what happens. But those actions will never come when you're sitting in those toxic emotions. So you got to isolate those thoughts that are generating those emotions, ladder those thoughts over to a new thought that you truly believe. That is the truth, which will generate a new emotion to get you the actions that will get you the results that you want. And you can unlock your life. All right, guys, have a great week. I appreciate you tuning in. If this spoke to you, shoot me a DM. And also, we are having a live meetup. I don't know when you're listening to this, but May 10th, 2024, we're having a live meetup in Atlanta, Georgia. So if you're listening to the podcast, you live anywhere near Atlanta, we're going to be at Chattahoochee Food Works in Atlanta, Georgia from 4 to 7 p.m. It's a free meetup. Just come hang out with us. The Deal Room crew will be there. A lot of real estate professionals, capital raisers, investors, multifamily people. So if you want to connect, plug in, and bring your journey along, come hang out with me Friday, May 10th, 4 to 7 p.m. at Chattahoochee Foodworks. All right, guys, make it a great week. Peace.
This is thepodcastfactory.com.